like kind of politically incorrect to say it. You cannot start a revolution kneeling. I mean, look at Kane, right? He's just, I mean, at some point the SEC is going to brief down his neck and maybe jail him or something. But like, good Lord, he's doing what's needed to push the space forward. I mean, you really got to go all the way and try out new things and maybe even fail to push the space forward. You cannot just try to like play within the regulatory confines and hope for the best.
Layer 1 is a podcast and community dedicated to helping you master all things crypto. We'll be bringing you the best interviews with project executives, technical analysis for trading of the most popular cryptocurrencies, and insight into what's actually happening behind the scenes.
As you join us each episode, you're going to hear about tokens, fundraisers, investments, and even crypto conspiracies. But please remember that nothing we say should be considered financial or legal advice.
Come join us on this journey and welcome to Layer 1. All right, guys, welcome to another episode of the Layer 1 podcast. We have a great guest, someone that we've known for quite a while now, but we haven't had on the channel. So we're excited to have Maple Leaf Capital into Layer 1. But before we get to Maple, what are you doing, Dimitri? What's going on?
Hey, just continuing the quarantine here in Jersey. Obviously things are looking more grim in regards to numbers every day. So it's kind of, looking outside, I'm like, okay, maybe I should probably get out of jerseys here soon. So, the markets are going crazy too. So things are rolling, but I'm excited about this interview. Maple Leaf Capital, I've been, obviously following for a while. It's in my neck of the woods when it comes to talking macroeconomics and all that fun stuff. So can't wait to get into some interesting discussions.
Yeah, it's going to be a good episode. We don't usually have the setup that we do now. I think I hit Maple up maybe earlier in the week. I was like, hey, let's have you on. Let's see what we can do. So we didn't send him any interview questions. It's not your standard interview. We're just going to kind of riff on what's going on in the markets, like you said. So without further ado, Maple, how you doing, man?
Hey, man, I'm good. Thanks for inviting.
Awesome. Well, let's get into, where do we even start? I guess let's start with your background, obviously, but I do want to kind of riff on where you first came into crypto, because I think you kind of came into at least the EOS ecosystem with kind of a splash. And I think people really knew and still to this day know, hey, Maple Leaf Capital, he knows what he's talking about. But let's go through your background first, just generally.
Yeah, of course. So, I had a pretty standard background in terms of what you call finance. So, I grew up in Hong Kong, but I came to the US for high school, for college. And then after college, I went straight to New York, started at a bulge bracket bank first and, investment banking, sales and trading. And then after that, I jumped shop to a long-only hedge fund, effectively. And after a few years, I moved to my current shop, which is a emerging and frontier market fund, mostly long-only. And we invest in, any markets that are non-US. And given my background in China, I spend most of my time looking at Chinese companies, in mainland, in Taiwan and Hong Kong. But, the world is our oyster, I like to say. And, we mostly get really long dated money in the States, such as, pension funds, endowments, and so on, investing through us, and we offer them that sort of non-US exposure. Probably pretty timely now, given the environment, although I'm not sure if it's a curse or a blessing. But that's what we do, basically just buying stocks in public markets, holding them on for a long period of time, very bottoms up, fundamental driven, looking at cash flows, competitive dynamics, supply chain, the whole thing. So that's my background. I started doing this kind of emerging market investing 3-4 years ago. And I think this is where kind of crypto comes in, because it's really hard. During our investment process, one thing we have to consider is you can be right on the stock, but you can, if the country's currency devalues 20%, which happened before, no kind of business fundamental is going to save you. No kind of ROE is going to save you from a negative return. So it's during that time, that first 1 or 2 years, we started, we're very, very mindful of these kind of FX swings. And then, once you dabble in emerging markets enough, you sort of start to realize that most of these countries, have some serious problems when benchmarking their currency against the US dollar. And then that's when sort of Bitcoin starts coming to the surface, where I personally started really looking at it in late 2017, early 18, which probably is the wrong time to invest. But well, thank God I didn't buy at the top. But that's when it really sort of got my interest. And then I sort of fell through the rabbit hole ever since. And it sort of really brings a new perspective on how you think about these EM and frontier markets as well. That's a bit of background. We can delve into more of that later.
Yeah, that's awesome. My first question would be based on just that background and explain. When you're looking at EMs, and when you look at investing in businesses in China and so on, the most popular question is like, well, how do we know it's legit? How do we know the numbers are legit behind it, so I can make a proper evaluation of that business, so I can make a decision in terms of investing? Because there's a lot of talk on the street how there's that dark side to maybe like Chinese companies that don't report accurately,
Yep.
might have businesses that are not real, and so
Yep.
on. So like, what's the experience been like, with that?
Yeah. By the way, a lot of them are scams. So you gotta really avoid them. I think, and there's like, it's like market by market as well. So in Hong Kong, because we dabble in the sort of, across small and large caps, the small caps are really, when you have a family that's been controlling the business for many, many years and they own 50% plus, I mean, they can basically do whatever they want to. And Hong Kong is littered with these like scams effectively, but that's a really good question. I think what it really comes down to is two things. One is you really have to build up a local network of people that you know and you can trust, and because they are connected locally, they can do the vetting for you. That's the one thing that we sort of outsource trust this way. And the second thing is we sort of explicitly look out for businesses with shareholders with backgrounds that we can get behind. So in a sense, okay, well, if you are KKR buying into a business in like China, we can kind of trust those guys doing their due diligence. So that's the second way. So that's for the initial screening. But once we go one layer deeper, I think, and by the way, something, crypto could really benefit from this as well, which is we really spend resources in looking for formers of the business. And we're talking about like former CFOs, former directors who can tell us, is this guy a crook? Is he cooking the books? Is there anything funny going on? The funny thing is in China, people are very happy to talk for $400, right, for an hour. And once you do like 3 or 4 of these, I think it becomes pretty obvious whether the business is investable or not.
Yeah, I don't want to get into the COVID talk too much here, but just with your background in emerging markets, like you were talking about, what are some markets that you would see or countries that are going to come out positively from COVID? And what are some countries that you think, or some regions that are not going to do so well and you're going to stay away from?
That's a good question. I think the generalization, I would say is those countries that eat rice are going to come out pretty well, and those that don't are just probably going to get slammed. Which really sort of puts the emphasis on the sort of Southeast Asian and sort of the entire Asia Pac region. And the reason to that, well, and it's a complicated second ordeal. But the first thing is, they probably can get the damage, first order damage in economic benefit, negative impact to a minimum. But at the same time, these are also the countries with some extent of secular growth, whether it's through OEM or whether it's through upgrading their industry stack, just becoming, more consumer centric, upgrading the tax structure. Like Vietnam is a great example. They are like some of these countries going to pull out of this pretty well. The countries that concern me a bit are those countries that are, I would say, heavily reliant on Western consumerism as well as exports, and at the same time they're sort of a little bit backward in terms of GDP and not doing as good of a job in containing the virus. So I guess 2 that really comes to mind are Turkey and Brazil. And those are the two countries that, even if, there are some businesses that we really like in those countries. I mean, we're talking about, top-notch software companies that are number one, number two in market share, category leaders, compounding 30, 40%. If your economy falls into the abyss, and people are literally dying, I mean, there's no saving grace for those countries and those businesses. But the blanket statement probably doesn't help as much, because what you sort of need to go into these sort of second level impact, which is how is the West going to respond to the virus at the end of this, which is, are they going to retrench and onshore some of those businesses and really scrutinize the supply chain? And if the U.S. is trying to relocate their supply chain, maybe not back to the U.S. but from Vietnam to, say, Latin America, because it's closer, there's a lot to lose for these Asian Pac countries. So we're still doing the work there and try to sort of find. It ultimately comes down to fundamental businesses, and we're trying to find those in APAC regions, at least for me, that aren't sort of going to get hurt from this re-onshoring trend. And at the same time, there's a bit of a strong secular story that still exists within them.
I love how you talked about earlier in regards to FX risk in terms of currency, conversions and devaluations that are coming, or we're seeing that right now, and we've seen. Obviously, this huge stimulus package from the U.S. side, we're seeing some deflationary times for the dollar, because for the fleet to safety, which is essentially hurts those emerging markets more, because their currency falls against the dollar, and that kind of escalates that economic issues that the people are dealing with in those countries. And Brazil is obviously one of them, and I haven't looked at the Turkish lira, but I'm pretty sure it's not doing as well against the dollar. So when it comes to like regular people in those countries, we often talk about how Bitcoin is really could be a way out for them to kind of get out of possible hyperinflation, these difficult times that are upon them, when the banks are going to be doing crazy stuff and continue to devalue their currency, and the capital restrictions around those people to keep them as a hostage in that monetary policy that they're going to have. It's going to limit the outflow of capital for those countries, for those people.
Yes.
Like, do you think, my question was, do you think we have enough, on-ramps that can on-ramp, bring in the demand from those countries, from those people that would turn to Bitcoin perhaps to hedge out some of their fiat volatility and not be hostage to the government that, is exercising these measures?
Oh, I don't know. I think they want to go to US dollar first.
Yeah, that's
right?
a good point. But if the restrictions are gonna come in a way where they're gonna restrict buying U.S. dollar with that currency, maybe we can. I know Russia has done some limitations in terms of you can only, let's say, buy a certain amount of U.S. dollar or restrict the transfer it outside of the outside of the country. Do you think that, what would be the catalyst then? If not that, what would be the catalyst for those people to, come into Bitcoin to kind of get away from the hardship that they're experiencing with their own currency?
Yeah, so it's a multi-part question. It is sort of what are those guys doing, right, with their livelihood, right, given the situation, and two is would crypto, namely Bitcoin, ultimately benefit? Well, as funny as it sounds, I've never been to Brazil. I've been to Turkey once. Very nice people. I think when the country, because in any country, if you're buying locally, and if you are saving locally, and if you're doing things locally, your life is largely okay. It's only when you sort of need to, spend your purchasing power elsewhere do you get kind of fleeced. But and it's especially bad for savers. I think the savers there want to turn their lira into US dollars, I would think. I don't know what the on-ramp situation looks like for those countries, right? If I can buy Bitcoin with Turkish lira, right? I would imagine looking at the Google Trends and Binance being there, and if you really want, you have your way. I think for a lot of people, and don't quote me on this, I think for them, once they secure Bitcoin, they might also want to convert that Bitcoin into USDT or USDC.
Mm-hmm.
If you have done any work at all, because it's almost like Bitcoin's almost like a ramp for them to go from Lira to USD. Is my understanding, because then it's still stable. You're still in this real world. You can still transact with it. I think the leap from, say, a really shitty country's currency to ultimately BTC still takes a while to get there. I mean, and those that stay in BTC are doing it not because they are aggressive savers, but because they are, to an extent, speculators, even to this day. Because there's like one level higher of wokeness, if you may, for you to be jumping from USD to BTC, if you are from Turkey, I would say. But at least that's my feeling at the moment. I don't know if you disagree.
No, yeah, absolutely. That makes a lot of sense. And one thing that, I'm from Ukraine myself originally, and our currency is tied to a dollar, obviously. And when our currency falls against the dollar, then you see the inflation starts hitting the consumer in terms of the products that they can purchase. Because believe it or not, it's like everything is kind of priced closer to what is priced here in terms of goods, just in our currency. But if you do a conversion to a dollar, it's very close to what would cost here in the US. And obviously, if the dollar goes up and that national currency goes down, then that inflation would pass to them, and the goods will start being more expensive. So it's definitely been on my mind to figure out what would push those people to really explore Bitcoin as that hedge for them to get into. But what you said in terms of buying Bitcoin and then getting into a stable coin makes complete sense to me, because the Bitcoin becomes like a gateway then, rather than just holding it as a preservation of value and being the main source of preservation of value. But what do you think of what eventually is going to happen with the US dollar? Because we know that once things get rough, we usually hit the deflation first, and then inflation comes through. Are you expecting the US dollar to eventually hit that with the stimulus packages that we're seeing and the things that they're doing that we have never seen basically in our history, in our financial history?
Yeah. Oof. Okay. That's a. By the way, if I know the answer to that question, I'll be making billions of dollars. So that's a really challenging question. And look, nobody knows. Even I don't think even Ray Dalio knows. And he's way smarter than me. I'm taking this one step at a time for the moment, right? The question is, will ultimately US dollar be inflated away and become Weimar, right? I think that's the question. I think the quick answer probably is that probably not in the foreseeable future. I don't expect to see it in the next 10, 20, 30 years. And the reason I say that is, let's put aside that the fall of an empire, it's a long process. An empire doesn't fall, in one night. And for dollar to ultimately lose its reserve currency status and to sort of all of a sudden hit a place where, the demand for it falls and then the supply that goes to the roof. I think as long as dollar is still needed to transact in some of the core commodities that we see today, which is predominantly oil, and that the U.S. is still a naval and military superpower, which enforces this transactional peg. Until those two both break, I think the U.S. currency will remain a dominant force, and by default to that, the US dollar tax on the world will continue, and inflation probably won't spiral out of control, is my current running assumption.
So let's go hypotheticals then and go down the timeline of the US dollar actually does lose its kind of global reserve currency status, and we live in that timeline now. What does the world look like without USD as kind of this world currency?
Okay, so let's fast forward 30 years, right? And how this is going to happen probably is the US deficit is off the wazoo, debt to GDP goes to 300, 400%. You know, there's a big question of whether US is going to onshore some of its industrial products in light of the virus and, whether it's going to drive inflation locally or not. But let's put that aside. On the same tangent, what's likely going to happen is China is probably going to nicely manage this transitional period. And, it's going to successfully, hopefully, upgrade its economy. And it's going to do to the US what the US did to the UK back in the early 1900s. And what happens there is basically, the UK lost the exorbitant privilege, right? They went through 2 wars, and then nobody, and they sort of depegged the Great British Pound from the gold, and the gold went to the US, and the US became, everybody wants the US dollar because it's pegged on the gold. I think this time around it will be the Chinese RMB becoming the world's reserve currency after the US dollar. And whether it does it through conflict-free means or doesn't, we don't know. And there's another kink to the story, which is where does BTC and gold fall in the spectrum? And are we going back to the world where, the government's, monetary control is tied back to a reserve currency, which is ultimately gold and Bitcoin? I don't know the answer to that question. But if I have to guess, this transitional period wouldn't be painless, and everybody would be better served to have both Bitcoin and gold in their portfolio as this transition unfolds. Because usually what a transfer of reserve currency does not come quietly, right? There's usually bangs and really, really violent or volatile times in between. And there probably happens to be some believers, when there's a rise of a reserve currency and a fall of reserve currency, there's probably going to be a large population that want to own Bitcoin and gold through this. And that's probably going to drive the value of it back to US dollar and RMB, I would think. So that's kind of my run rate consensus at the moment.
I wanted to talk about you mentioned, obviously the gold side of it, and, we're seeing some issues there in terms of physical gold deliveries, and rules are changing, which is, becoming very interesting because, it's all the derivatives markets and so on, right? Everybody's scrambling to get physical gold, and suddenly they don't have enough reserves and so on. What do you think in terms of, countries, and their capacity? Would you say that U.S. is the biggest, in terms of having the physical gold reserves? Where is it in relation to China, like Russia, for example, as well? We know that Russia has been struggling a lot with oil now. But as far as the ammunition and chips that you have when it comes to having gold reserves, when the time comes of the flippening, would you say what are some of the major players that are hoarding right now?
Yeah, Dimitri, I really don't know the answer. I'm really a charlatan in that regard.
Maple, we had you on the podcast so you can answer all these questions. Man. We want answers. Go ahead.
Yeah. Unfortunately, I don't know. Mm-hmm. It's a quick answer. Sorry, go ahead.
Yeah. No, it's obviously all kind of hypothetical, and a lot of it, speculative. Where we're going to end up, especially given the times that we have right now. So I wanted to talk to you about the COVID, right? So if you want to get into that a little bit, there's a lot of talk, obviously, in terms of how China handled it, and the info that's coming out right now. There's also China had some unrest as well. There was that issue with the Hong Kong, and now basically this virus kind of reunited everybody to fight against this virus, and the Hong Kong issue kind of faded away. At least we don't see that anymore.
It's coming back. By the way,
yeah.
I mean, I feel very sorry for the Hong Kong citizens. I mean, it's protests and then virus and then protests back again. I mean, it really sucks.
Right. Yeah, it's crazy. And then, right now we're seeing numbers that out of China coming out, there's no new cases for COVID, suddenly. So like everything was fixed. And then there's some other issues started with other provinces where there was rioting started, and they started locking down towns to say that, hey, we're starting to see some new COVID cases and so on. How would you say, would you say that, China right now, if you had to speculate, does it have a pretty good grip on this virus already, and they're kind of at the end of the road compared to the rest of the world?
Yeah, the quick answer is probably yes. I think China is well. It's always nuanced to say whether a country is underreporting, right? The more you test, the more you have. And then I think China is also really underreporting when it comes to patients that are positive but are showing no symptoms. And it's only very recent that they reverse course on this. But is 80K infected low? Absolutely. But are people literally dying on the streets because COVID is everywhere? I don't think so. Just from my contacts on the ground, as well as my family's there, my sense is China has it 80%, 90% under control. And where's that sort of 10-20% coming from? Is that it's being imported from foreign countries, and actually how China is controlling this is actually very it's done well. You kind of wish that every country does this, which is I'm sure you read about it online, but it's a very step-by-step process of only various airports take import travelers when you come on, no matter whether you're sick or not. You are forced into a hotel of the country's choosing for 14 days, no exception, and only then you are forced to come out. But despite this, whether it's through smuggling or whatever, or whether people just hide it really well, like there are still 1 or 2 cases that sneak through, and maybe they show no symptoms. Especially if you're like a foreigner. Like if you're a local, you're forced to quarantine. If you're a foreigner, you're allowed to sort of basically put yourself in a neighborhood that volunteer to shelter you, and if you actually are sick, and you're running around and spreading it, then people will get sick, right? So those sort of cases that are popping up again in China. But overall, I think China has it under control at the moment, and right now the government is. It's a very delicate balance between we should restart our economy and just try to keep this down as long as possible in line with zero. And I think the Chinese government got a process down now that is pretty good, which is you have police patrolling on the streets with temperature detection. Every building has temperature detection when you go in and come out. In your residential areas, all property managers have temperature checks when you come in and go out, and regular testing will be done in your residential property areas. So they're kind of doing everything they could, but I think we would probably be looking at, like low hundreds to teens of new cases, mostly, without symptoms. And hopefully, those guys are quarantined early enough so that this doesn't flare up again.
Yeah, looking past COVID, I definitely feel that there's like more of a risk to Western countries that don't have these governmental restrictions and governmental control on their citizens. If all it takes is and I'm not underplaying COVID at all times, but what's the chances that this happens again? I know like part of the reason why we're struggling now is because we didn't have that infrastructure set up. But yep. What's to say that another virus doesn't get released in a year and shut down the U.S. economy again? And it just seems like that is like, is our Western powers specifically vulnerable to viruses like this because of the lack of governmental control over their population? It's definitely an interesting discussion. I don't want to have a COVID discussion the entire time, so I do want to kind of make our way back into Maple Leaf Capital and kind of the profile that you have. And I believe the first tweet I saw ever from you and kind of like just Maple Leaf Capital in general was, man, it seems like 20 years ago now, but I think it was,
I
think it was late 2017, early 2018. But I definitely remember like as the EOS ecosystem was starting to boom, and correct me if I'm wrong, but that was where you kind of made your name, or at least initially made your name within the crypto sphere. I'm wondering how your investment thesis has changed since those days. It's so long ago that what did you see back then, specifically maybe within EOS, but just crypto in general, and how has that changed to now?
Yeah. So let me answer the first part of the question, which is COVID. Would it flare up again? I think the running joke is, you're not going to listen until you get smashed in the face, right? And the West is getting smashed in the face, right? Effectively. I still believe that the West has more weapons to fight the virus than China does when it comes to testing. I mean, China literally has bodies, right? And manufacturing supplies. So once the manufacturing supply issue is solved and the West is really on its A game, I mean, we're talking about the US that, fought the Japanese, right? And they didn't think the plane of the Japanese were an issue. And then it just smacked the US in the face. And then they realized that they have all these industrial know-how and IPs to solve that problem. I think it's going to go through a very similar, and I think this is sort of my base case is the US and Europe are going to figure out a way that works in a democratic society. Right, which is through better treatments, more hospital beds, more regular testing, get people back to work, but just through sheer technological know-how and IP and cure, right? They're going to manage this their own way, and hopefully Trump and Europe are more on their A game when October comes along, and I think the market is pricing in another flare, back in around October, November, December. But God, if they don't figure this out, I think a lot of businesses will go bankrupt, and we're sort of going to that depression scenario. But that's we all hope that they can solve it. On EOS, I guess yeah, goddamn, you're right. It's a very long time ago. I guess how it evolved is that when I first started, I thought that a high throughput blockchain is what's needed for this industry to get to the next level when it comes to exploring arcane and novel business models, right? Blockchain is a addendum to a database system, right? It's just a module to a database. And it's only after you add in the incentive layer, the component, does it become what we know and love today, right? Otherwise, it's just like UTXO and Bitcoin without the mining incentive. I mean, that's just a bunch of
just
tech, right? And just tech, right? So I thought, okay, well, it would seem to me then, okay, well, whoever solves the issue of high throughput and at the same time being secure enough through incentives is going to lay the ground foundation. It is going to be the oil whereby all these new business models could spur out, right? So that was the initial thesis, and maybe it'll be gambling, maybe it'll be gaming, maybe it'll be finance, it'll be all sorts of different things. So that was the original thesis, and to an extent, it was not wrong, right? Because I think when the mainnet launched in June, by September you had this first wave of dApps coming out, and I was pretty excited at the time. I started really delving into effectively quasi equities, right? That's a space I know well, and really just sort of buy low, sell high, or buy high, sell low. But I guess what then became a little more apparent and disappointing is that Block One isn't doing shit, right? And they are not doing anything, whether it's out of fear or out of sheer incompetence, and they are not harnessing a big enough ecosystem to trial and error all these sort of various tech and business ideas. And once you don't have that, what is good with oil without the steam engines, right? Effectively, so the oil isn't worth anything. That's kind of where I come to, which is it's so that's the first thing, which is as decentralized as the ecosystem is, you can't give birth without having a mother, right? You need a strong centralized force to push it. Even Eve has it with Vitalik. Over time, you kind of it's just not seeing it in EOS. And then secondly, I think I think it's really hard to run before you know how to walk. It's really hard to build, an aerospace industry when people don't even know how to build steam engines or dig oil out of the ground yet, which is kind of what happens today with ETH and EOS and Tezos, which is you're still building the foundational infrastructure, figuring out your incentive mechanism to your layer ones, and building all these things such that an aerospace industry is eventually possible. And I think I overestimated the speed at which this could evolve. It might take 3 to 5 years before the infrastructure gets to a good place. So I think those are sort of the realizations I've come to, and what eventually then happens is, okay, well, what do you want to bet on, right, in this new environment? And I think what you want to bet on, at least that's how I structure my own, Maple Leafs portfolio, is, I think you want to allocate the dominant portion of your portfolio into something that already has buy-in, right? Which is a call option on the world falling apart, which is Bitcoin, and then a tangent to that, which is like, for example, like Decred or a few other ones that are doing interesting attempts on the same tangent, and then you want to allocate probably, a much smaller portion in attempts that are actively capturing value, in this new, this digital world that is, occurring. I'm not sure if layer one tokens is the best way to go in terms of capturing the best upside. Like maybe it does well if we get another bull cycle. But going back to the original analogy, is like, would you rather be long oil, or would you rather long, like the first, airline company? Airline's a bad example, right? Because they'll kind of go bankrupt. But like, you get my drift, right? Would you rather own the pipeline, or would you rather own the oil?
Mm-hmm.
And yes, oil could go from $1 to $20. But if you fund that pipeline company from zero, I mean, that's like a 10 to 100 bagger.
Mm-hmm.
So I think the rest of that portfolio, unless you are a big infrastructure player, if you're Binance, if you are like Polychain, you can deploy a lot of capital in layer one, and you can reap that inflation, and you can do interesting stuff with it. But unless you're that, you probably are best served doing what framework guys are doing, which is, taking a bet early on some interesting venture bets, using token as an incentive mechanism to bootstrap some business. And in exchange, as that business generates cash flow, it acts as a token or an equity that captures that value. And then maybe if one is technically savvy, another part of a portfolio, or even a greater part, would be dedicated towards just risk-free arbing across different, interesting projects, including but not limited to bidding on Maker when it, auctions at zero, or, basis trades, or cross-platform arbs, and so on and so forth. I think that's probably how I would structure a portfolio. But curious of you guys' thoughts.
No, yeah, that sounds pretty balanced and interesting in terms of the strategy. One thing that kind of concerns me when we end up speculating on the value of tokens, our expectations for adoption and technology succeeding, and so it tends to outrun the timeline when it's actually going to happen, and so on. So, the volatility there gets pretty crazy. But in certain situations, though, what is interesting to me is that you'll see sometimes where you have private entities that go in and copy the tech, or do that on a private level, and they use the technology's benefits to do it privately without using the tokens at all, in a sense, right? So like I hate to bring it up, like Ripple, but like Ripple has been one that's kind of done something where now they do cross-border payments through their what is it called, rapid liquidity or whatnot, right? But it's not using XRP as the token, and like we might see, like we are seeing enterprises are starting to use this like blockchain technology and like all these benefits that all these networks are coming out with, but without using the tokens at all. So it's like, what are your thoughts about us being right, that the fact that this technology will make a difference, but maybe not in a way that we think, in terms of translating that back to the token price.
Yeah, I think so. What's the best way to put this? So you're absolutely right. Blockchain is being used, but like I said before, it's just a module in a database technology, right? And the first use case when you match that to incentive mechanism is Bitcoin. Like that's the first sort of real life use case of blockchain outside of being just a module within a database system. And would there be other use cases? Like, would this go from 1 to 3 to 1,000? I think that's what the industry should be thinking about, right? Because it would be thinking too small if it's just going to be an incremental improvement to database. And quite frankly, a decentralized system existed for, I don't know, like 5, 10, 20 years already. It's nothing really new. And there are a lot of data scientists and data center sort of experts that miss this because they just saw this as, oh, like we already know what this is. But what's really novel is that incentive layer. And how I think, this is just my personal opinion, you probably eventually for this to work on a massive scale, you probably need governmental buy-in. So Block One is not entirely off base here, but this is just my personal opinion. But eventually, and it ties with the current situation very well. Like eventually, I can think of the blockchain as the backbone that enables this digital native value transfer ecosystem, right? So what internet enabled is seamless, cost-free transfer information, right? From one place to another across space and time, no problem. Blockchain adds an encryption and incentive mechanism that secures the information, which now can harness value characteristics. You can now transfer value secured by the blockchain. And that is a fundamentally different pipe than the pipe that we're used to, which really goes to the hand of 20 people, right? One transaction going through the credit card network, through Visa, through 2 banks, and then through like the SWIFT system. It's like 20 people that touch this transaction. This would be sort of outsourcing that transaction to different actors across. And what that builds is a backbone. And in that backbone, once you have socialized costs like this, the cost of one transaction can be de minimis. And why do I say governmental buy-in is important? Because without that buy-in, any business that float on top of this has to be digital native. And what does that mean, right? What is digital native, right? So think about, it means it cannot touch the real world. For example, if you want, what's a good example? You can have a restaurant that issues a token and just, to pay for sushi or something, or like you issue a bond that is in exchange for food. Because at some point, somebody has to go into the real world and type in certain metrics such that this thing can be on chain, right? So at some point, when somebody redeems this token, it will have to abide to the real world's law, right? If the restaurant owner defaults on his promise, somebody in the real world has to go after it. And without governmental buy-in, without governments or government outsourcing some violent body exercising that right and punishing bad actors, you cannot have the blockchain and the digital economy touching the real world. So everything before that happens would just be digital native, which is like, I don't know, like gambling, or like, like Oracle enabled sports betting, or like e-gaming systems where, when players log into StarCraft, you can bet on equity of that StarCraft. And it'll be very interesting experiments, but all of this needs a strong enough layer one, and 2, it cannot touch the real world before we have this kind of, reform. But this is where I think it can be extremely promising. Is okay, let's say, and by the way, like everybody's going out of business in COVID, right? This is where it ties in. Let's say, what if the US government does away with the accredited investor rule, and it does away all the red tape when it comes to small business financing, right? If you want to start a restaurant, you now have massive financial tools at your disposal, unavailable before. You can fund your business through tremendous financial innovation. Your community can back you and get skin in the game. backed by your receivables, your payables, your cash flow, redeemable in coupons and interest in all sort of forms, all of which is recourse to your credit in the real world, and there will be a punishing mechanism if you default in certain ways. And all of this backed by the violent body of the US government in exchange for tax dollars, right? That I think would jumpstart tremendous innovation and small business and getting cash back to people. That's what I think ultimately in the next 20, 30 years that this whole thing evolves into, and then this will all be very cheap, by the way. In a good layer infrastructure, you cannot do this in a real world today with credit cards, and this will just be unfeasible. But with this blockchain technology, when you spread the cost across several miners, at various thresholds, you can do that. And I think that will be empowering, and I think that will be highly innovative. The two hurdles are the layer ones there yet, and is government to do this? Both of which seem like no in the next 3 to 5 years.
In your comments to Block One, I do think that they haven't done enough. I think all roads do lead to Bitcoin at this point, and we are going to continue to see the proliferation of that community. I like the ETH community. I think that they have done. I think they've kind of hit a tipping point of enough members of that community where they can push things forward. EOS is yet to be seen, but I do like right now companies with cash. I know Dimitri was talking to always when we were at ICO Alert, a ton of companies raised 200, hundreds of millions of dollars. Maybe not just the amount that Block One had, but they were raising millions of dollars, and they didn't preserve their capital correctly, correct? So they were raising all this money, and then they held it because YOLO, right? And they ended up with nothing. So I do like, and I am bullish on EOS solely because Block One does have that amount of cash at hand. I hope that they deploy it more often, and I'm not too bullish on Voice. I know they just released 150 mil for whatever reason for Voice. But I am bullish on EOS because of the cash, and I am bullish on other networks that have that cash funding going forward, because I think they will survive. It's the ones that are cash strapped trying to find a revenue model in a bear market that won't be here in 2 years.
Agreed. And then, we're talking about like Tezos, right? It's the Polkadots of the world, massive war chest. And by the way, props to Block One, like having financiers, doing capital allocation is wicked smart. Like they manage this very well. Agree with you.
Yeah, absolutely. Actually, I just remembered you were talking about the value transfer over the internet. One of the people that we interviewed was Alex Mashinsky from Celsius, and he likes to talk about the money over IP, the MOIP, right? Which is that interesting side of how the money is transfer of value is going to change and so on. But what are your thoughts about? I want to get your thoughts on the DeFi space. With the ETH and the things that are going on there. There's quite a bit of struggle there. We've had a couple of guests that come on that we've talked about. We've talked to Kane from Synthetics. He was honest in terms of the issues that there were, and the hurdles that they had with the front running, with the oracles and so on. So the DeFi space right now is getting really tested, and my question was, when the DeFi space was getting kind of a hang of it and starting to blow up, is that, what are the kind of black swan measures that you have in place to prevent, from DeFi blowing up and going up in steam just because of settlements volatility and all these things that are available right now, and derivatives and so on. What do you think of DeFi right now? Why is ETH the most popular one? Are we going to see DeFi maybe on EOS, and where we are on DeFi just in general? You think we're going to have more pain before we're going to rebound and actually be valuable?
Yeah, that's a good question. I think so. First of all, let's not beat around the bush of what DeFi is. Okay, DeFi exists, right, to service businesses, right? It exists. It is a business that exists to fulfill some sort of demand, right? And for these, like I said, right, like oil is there, which is ETH, and then DeFi is these kind of plumbing, and they serve some business on top. And what is it? It's casinos. It's people that need to borrow against their collateral and need to go degen gambling, right? those are the two main use cases that DeFi satisfies. That's all there is to it at the moment. And maybe they're doing some cool stuff, but like, I mean, take a look, right? Like MakerDAO and Compound, right, are there because people want to, you know, borrow money against their ETH and then buy more ETH effectively. You know, with Kyber, you know, RAN protocol and what are the other ones like Synthetics. I mean, it's literally you need to swap one shitcoin with another shitcoin, and you allow market makers to allow these to happen. So to answer your question, why hasn't it happened on EOS yet? Well, because there are not enough developers doing these kind of things. You can't do it with one dude. You need like 1,000 of them and all failing at various degrees so that one sticks. And DeFi sort of did that. I think the extent to which, so my conclusion first, right, which is all of these guys are trying very interesting things under the backdrop of speculation, right? You're servicing ultimate demand of speculation, and you're doing all these things to best service it, right? You can now borrow, you can now do decentralized options, you can kind of run DEXs. That's all great. They are building a foundation for finance, whereby eventually new demand emerges in this digital layer that the DeFi layer will be there to service that as well. Imagine a future where you now have some sort of equity token that you need to borrow against, right? You can now use MakerDAO to do it. Imagine a future where, you know, when these businesses occur and you can now have credit, unique to your own ETH address. It can now crawl your entire ETH address and dictate your credit worthiness. And you can this is only applicable on this digital layer. You can now do uncollateralized borrowing, right? It's kind of repeating the whole, real world as we know it. And you're creating M1s and M2s out of thin air. And frankly, it's kind of like the same real world that we have. But not until then would the DeFi space take off. And now it's trial and error. It's building a foundation. And if we never move away from that demand use case of speculation, this space will just die. Like it will not, you know, break beyond what it currently has, and there will be cool attempts here and there, and the infrastructure technology will remain, and the ideas will be tested and true. Those will exist, but it will be stagnant.
Yeah.
Yeah. Go ahead.
No, I was going to comment actually with the comment that Dimitri makes all the time, which is that volatility kind of drives demand in all of the products that we see around us in crypto. So that is a great point. I'm interested because we just talked about DeFi. You did kind of touch on a little there, gaming and gambling. I'm interested outside of DeFi, what sectors do you think will emerge relatively quickly? And then what sectors are going to take years to emerge within crypto? I know we talked about how Bitcoin is king right now, and you kind of gave us a general aspect there, but you have dabbled in gambling dApps, and I'm sure the gaming dApps are literally, you know, right parallel with them. So what sectors do you see outside of DeFi that you think will emerge relatively quickly and then long?
It's a good question. I think right now what I'm looking for outside of DeFi is any company, well, it's a bad way to put it, but any company that has the balls to just issue equity on the blockchain. There are a few examples, right? I mean, they're DeFi centric, but what have you, like Synthetics, Kyber Network, the exchange tokens. Those are the guys that are sort of basically saying a big FU to the SEC and just going ahead with DCF-based equity products. And they're not even equity, frankly. They're sort of more like a IOU type royalty based on solely promise and promises only, because any investors have no recourse. But I think that's the space that could get very, very interesting. And it could happen in any sector, right? It could happen, imagine like a what's a good way to put it? Imagine like a decentralized fund that invests, in arbitrage, right? Just across platform, and they have this algo that runs in the background. And if that fund just issues a token on the asset value of this pool, and everything is on ETH, and you can buy and sell that token on Binance, and literally just invest in this fund. So that's an interesting idea.
That sounds kind of like BitConnect.
Right. So I think that's interesting. Uh, I would be dying to see some businesses that have a good reputation in the real world dabble in the space. Maybe first starting with like coupons. Because let me give you an example, right? Like I know of that company is a fucking scam in London where like they have a burrito shop and then they're basically issuing burrito bonds payable in burritos or like I forgot the name of that business, but my friend invested in like that bond. But basically, the bond they sold it online, and then you buy the bond. It pays an 8% coupon, but you can also I think redeem it in burritos, and that bond gets into building the store, right? Effectively, of expanding more stores. Well, ultimately, that company went bankrupt because they're kind of fucking frauds. I mean, who in their right mind would do this? But that's an interesting attempt. Now imagine you have an app, for example, right? Like that really vet the businesses that come onto this, and these businesses can now issue financial instruments that are, on the blockchain. Well, just to show that they're there, and if there's legal trouble, you can point to where exactly what happened. And this business that sort of backstops this is the one that goes through the legal trouble and sort of prosecute bad actors and so on. But at the same time, they're issuing effectively receivable or equity or bond tokens on behalf of I'm dying to see a business that just take the leap and do that and forget about the regulation. You do it in Vietnam or something, right? Or Singapore, right? You get like government official to be your shareholder so they can prosecute you. I'm dying to see something like that happen, because that to me is what blockchain should really go after. It's some really cool attempts like this. So that's the kind of thing I'm looking after, which is where are cash flows generated from real demand, and where are some of these real linkage between real life and going all the way in terms of really going finance. Like we're talking about real cash flow here. I'm dying to wait to see some businesses doing just that.
What about real estate? STOs.
That's possible. But they have to. I think there are one or two platforms that are doing that. Those are good attempts. But I would love to see some. It has to be super simple. This has to be like ultimately B2C, right? It's almost has to be a B2B2C model, whereby for real estate, realtor on the one end, this business in the middle, consumer on the other side. The business in the middle basically creates all the legalese and abstracts that and creates an app so that it's super simple for the consumer to just click and buy. And prosecutes the realtors when a default or whatever. I don't think anybody has done it yet. So far, all I've seen is web-based and super arcane and going through regulatory hurdles. It's really hard to do.
There are companies and STOs that are doing real estate, but we haven't really seen that really blow up, as much as, a lot of people in the industry were anticipating, because the value proposition is there, obviously it offers many benefits in terms of liquidity, being flexible, and so on, which, essentially should trickle down to the real estate and make that.
Yeah.
But I think what Maple was getting at is there's no interface that actually connects the business to the customer, correct?
Correct.
Okay. Gotcha. Hey, so go ahead.
Sorry, just the last thing, it's like kind of politically incorrect to say it, but like you cannot start a revolution kneeling. I mean, look at Kane, right? He's just, at some point the SEC is going to breathe down his neck and maybe jail him or something. But like, good Lord, he's doing what's needed to push the space forward. You really got to go all the way and try out new things and maybe even fail to push the space forward. You cannot just try to like play within the regulatory confines and hope for the best.
What a quote. What a quote.
Yeah. I hope that doesn't happen because I love that guy. We had a real conversation.
Dude, I want to run through a brick wall for Maple right now, man. That's crazy. So we get a lot of people on the channel that have obviously traveled to Asia. They live in the U.S. or they live in the Western. They live in Western Europe. They come to the U.S. All these things, but rarely do we have someone that has lived in the U.S. on the East Coast, West Coast, and traveled or lived in China. I do want to get your kind of perspective on maybe perspectives that we in the US wouldn't know about people in China. Because I feel like there are a ton of people that we have had on the podcast that are like, oh yeah, I've traveled to Hong Kong and Beijing twice a year, but you definitely have like a different perspective. You said you had family in China. So yeah, give us kind of the insight into what makes cryptocurrency more relatable, or maybe just I've struggled to find the word here, but just like what makes the Chinese citizen or Asian citizen in general more apt to finding crypto? I know that they have these payment systems, they have WeChat, they have all of these things where they've been, they have like electronic wallets, digital yuan, and things like that. So kind of give us an insight there, just from your perspective, having lived in the US, family in China, all of these things.
Yeah. So the question is, what makes the Chinese more open to crypto, right? Basically.
Yeah, definitely. Go ahead.
And by the way, I think Mike, is that like, I think the innovation still happens in the West. Like just Chinese are very good at optimizing, but when it comes to being selfless and innovating, I wouldn't necessarily look there for it's getting better, but it's pertaining to a very small subset of highly qualified individuals. But that's beyond the point. I think generally, I think you hit the nail on the head first, which is China. If you've been there, you would notice everything is highly digital already. If you go there and you use cash or credit cards, they will know you're a foreigner, right? Basically. And then the running, and by the way, this is not just in like a nice hotel or something. This is like if you want to buy a wonton on the street, like you use your cell phone. I was shocked to see this, by the way. I was in China in January when the COVID was, before it really blew up. I was visiting a friend and I was going to a building. You know how in the US, when you go into a building, you have to like sign on or something, right? Mm-hmm. In China, these are really nice office buildings. What you do is there's a facial recognition system and an iPad in front of it. They recognize your face, and then you type in your info, and then it sends a text to your WeChat, which you verify. And then once you're done with that, the gate facial recognizes you and allow you in, and it knows which floor you're going to, and it just breaks you all the way there. So in terms of the infrastructure and in terms of the value transfer mechanism for some of these things, China is already way ahead of anywhere I see in the world. Why is that relevant? It's relevant because, like I say to my friends who want to get into crypto, like digital transfer of value is a gateway drug to Bitcoin, right? So that's one thing. So when you grow up with this, you are super used to it. The second thing is there is no place in the world which saw such a rapid pull away from poverty within a span of 20, 30 years, whereby you have almost an entire or two generation of people that grow up with mobile internet money. The younger generation, certainly, the people my age, I don't want to reveal my age, but you can kind of tell. And, people who are a little older than me, everybody's on it within one generation. There's no generation divide when it comes to, do I want to use digital transfer or not? Unlike in the US, you're either card, cash, or whatever, Venmo. There's no such thing. Everybody's on board. So, and it's a big country. So the wide adoption, even if it's just by chance, like 1% of people get interested, that's already a massive base. That's one thing. The second thing is, I wouldn't call it a cultural thing, but whenever you have such a big pull away from poverty, what am I trying to get to, right? In the US and Europe, I mean, Germany, there's like a family with 500 years of heritage, and they've always been fucking rich. In the US, if you're rich, you have a senator friend, like you're kind of always rich. In China, there's no such thing as far as, 40 years ago. Everybody was fucking poor. And those that are ballsy got rich first, and then those are smart then got rich, and now you're connected, you still get. But there's like a general high level of social mobility. And you sort of see the social caste cementing right in front of your eyes, in China today. So if you bought houses 10 years ago, you're fucking rich now. But if you're a generation that kind of living through that, you see the opportunity dwindle right in front of your eyes and you want to make it, right? That's why people work so fucking hard. That's why people work like, 7 days a week and 12 hours, 15 hours a day, because they see that happening, and life is always getting better as long as you work for it. So what happens when the life is getting better and you see the social caste cementing and you have this massive pull from poverty is that I think there's a sense of, and Chinese people love to gamble, right? Because this is kind of your last chance to really make it in this world before it becomes set in stone. I mean, we'll have now generations where you have no mobility. So you better go and grab it, right? And crypto, 10 years ago, it was real estate. Sorry, 20 years ago, it was real estate. Sorry, let me take it. 30 years ago was starting any business, right? 20 years ago, it was the internet. 10 years ago, it was mobile, right? Mobile startup. And now 5 years ago to now, it's like, it's crypto. Like that's your one chance to like really crush it.
No, I'd say what an interesting discussion, man, because I feel like what you're getting at is that, and I don't want to get too morbid, people in the US don't understand that the American dream is non-existent anymore. And it's almost moved to China, and it's going to move somewhere else relatively quickly is what you're getting at.
Yes. And by the way, it's following all the footsteps of America. Like I would say Chinese are more American than Americans are today. Like the Americans are the Americans during the Great British Empire. I mean, your country was fucking great. I mean, the Puritan spirits, the can-do attitude, right? This sort of, really working through your hands and building up this country. It was fantastic back in the 40s and 30s and even before that. China is living through a lot of that today. And I have no question if they don't blow up royally, which every 5 years seems to happen, it's going to be the US like the US was the UK.
What about the social aspect of it in terms of population demographics, in terms of age? There has been data that's kind of been talked about in terms of the age differences and groups of those people that would typically give us a projection for a boom, possibly booming country in the future. And China didn't really fall in the really best area.
No, you're right.
So like, what are your thoughts about that and how you think that might undermine maybe some of the growth, or what what's preventing it from being that way?
So what's happening and where are we going, right? So there's no question that the demographic trends in China does not support what you would call a typical emerging market economy. Right. If you had that structure in Brazil, if you had that structure in Vietnam, you're toast, right? You're dead. And just for those that don't know who are watching this, basically it's an unusually high aging population. The birth cliff started happening in the 1990s. The kid, and those guys today who are turning like 30 are having kids, and they can't afford kids, so the birth rate ticks or dive lower. And a newborn, in the past, 5-10 years, it was 15 to 17 million babies a year. This year is going to push towards, 13 to 14, and next year it will probably be 11 to 12. And soon enough, it will probably be below 10 million. So it's a rapidly aging population with a demographic that is, not as young and can't. So that's the problem. The cure is the Chinese has an unusually high amount of educated labor and excellent engineers that are still underpenetrated. So while you can no longer have, bros in Foxconn and Shenzhen, assembling, like iPhone for $5 an hour, you now can have a Tsinghua educated, master of engineering, doing CAD design for Huawei. And that labor force is still cheap. And if you look at Zoom, for example, the stock's been doing so well. What is their core competency advantage? Because their fucking engineers are 50% cheaper than the US, and they're all in China. That labor force is still growing and growing rapidly. And you have to commend the Chinese government for building such a good educational system, and the roots of Chinese receiving education to climb the social ladder being so strong. You're just churning out solid engineers and solid, highly educated labor forces. Why is that so important? Because that allows you to upgrade your economy from just, making plastic toys for the US to making more advanced products and even innovating on your own. Most of these emerging market countries that lived through what China lived through with a better demographic trends don't have that internal power to push through this. And what happens then? Well, the US economic cycle swings. They are forever on the lower part of the value chain. And when the cycle swings, they get crushed and they never upgrade. And before they know it, there's too much of a deficit, the FX is in a drain, and their population is too old, and they're fucked. China is managing that problem incredibly well. And you see that in the national policy, which is, what is Chinese government doing is, A, making sure your people don't go out of work, B, making sure old people don't revolt by providing free healthcare effectively, C, really stressing education. If you want to go to school, the cost of going to school in China is like so fucking cheap, unlike the US, even for the Ivies, right, of China. And then 5 is, through a national effort, decide what are some of the core industries that we need to go into and funnel talent into, right? And those are the hardest of industries, right? Those are the semiconductors, the healthcare, the renewable energy, the aerospace. And it's all of the things that the US is outsourcing or not doing itself.
Mm-hmm.
But it is every bit as important to upgrade a national economy from whatever it was to wherever it will be. So I think they're doing a fantastic job in managing that. I mean, it's risky path, but it's the path that has to be taken.
Gotcha. That's an amazing answer to the question that we asked earlier. So let's say, and I do want to wrap up the episode because I think we're coming up on like an hour and a half, almost an hour and a half. But I do want to ask you. So now, let's say you're president of the U.S. Even I guess president wouldn't even be the right word. He doesn't
I'll never be the president.
Yeah. Well, I'm just saying. Let's say you were God of the U.S. Hypothetically, God of the U.S. for a day. What do we do, or what does the country do? Is it just everything that the Chinese are doing now to kind of make sure that we continue to, I guess, compete within the global environment? Because you named everything that the Chinese were doing correctly, and kind of naming things that the U.S. we're struggling with and kind of outsourcing, like you said. So what can the U.S. What would you have the U.S. do today if you were instated as the overlord of the United States? And then we can wrap up.
But by the way, that's a really, really tough question. That's a really tough question. I think a lot of these probably would go back to, as of this point, I think it goes back to a two-pronged strategy of, reallocating your resources internally regarding infrastructure spend as well as technology spend, right? Really upgrade your nation to prepare for the next century. And I'm talking about like just basic things, right? Like roads, like airports, like, the last dams we built were like, 70, 80 years old, like something like that in the US. That's the first thing you would do. You need to build a strong infrastructure foundation. And if instead of, but that's a delicate issue because you're fighting a war to protect your reserve currency stats, right? That's why you're doing all those things. And it's a rock and a hard place, right? So where's your deficit spending going to go? That's the first thing. And I think the second thing is you have to provide some sort of, structural support for firms that are innovating locally. And that could be a host of factors in terms of tax incentives, policy incentives, or, tweaking the stock markets, like the sort of a taxing structure in a certain way to incentivize, innovation and onshoring of the sort of the highest tech manufacturing that exists. And the US can't build a plane anymore, by the way. Like it's all outsourced to India and like the rest of Europe. So I don't know how you onshore that because it's going to be really expensive. But at the very least, you need to build like the engineering talent to do it. So neither are really easy questions. And to be quite honest with you, the decline of the US, I don't know. It's like every nation has its lifespan, and it just happens sooner or later. Like it's really hard to reverse.
Yeah, I think the fostering companies like Tesla and founders like Elon would go a long way in the United States. I think private companies are the way to go. So, hey, man, this has been a phenomenal interview. You've given some of the best insights I think we've had as from like an interviewee perspective that we've had on the channel. So I really appreciate you taking the time to talk with us today and discuss everything crypto, everything global macroeconomics, everything that we got into. We have one last question that is a book recommendation for the viewers out there. It could be crypto, could be non-crypto, tech, nonfiction, fiction. What do you got?
Recent ones or new ones? I don't know. Like
you can go 2, 3, 4, doesn't matter.
Yeah. Some of the books I really enjoyed, I think Innovator's Dilemma is great. I think it just comes to show you it's like how innovation happens, and I think it a lot of people can draw great insight on how to build a firm or how to just kind of drive innovation. A book that I just picked up is called Cokeland, Kochland, which is about the Coke industries. It's probably like the two brothers that are richest that you've never heard of, and they own everything in the United States, from like textile to chemicals or whatever. Fascinating book. Yeah, I think those two are very good.
Awesome, man. Well, we appreciate you coming on again. We had a fantastic episode here. You can follow everything Maple Leaf Capital I'm looking at it right now, at Maple Leaf Cap on Twitter. And I believe do you have a .com as well?
I do. You can find it on Twitter.
Okay, awesome. Well, thanks again, Maple. We appreciate everything you did today.
Thanks for having me on.
Thanks a lot.
Hey guys, we hope you enjoyed today's episode. Make sure to check out Layer 1 on all the audio and video platforms listed in the description. Thanks for stopping by, and we'll see you next week.